One of the things I've seen recently, there's a lot of conversation starting to gain steam about property taxes. Going so far as even Washington politicians coming out and saying that property taxes need to be abolished, because you buy something, you pay for it, you own it free and clear, especially even if you've paid it off. Like a lot of our listeners today, a lot of our folks that are listening to the station right now probably have paid off homes, they're retired, but they continue to have to pay property taxes on their real estate. And those holdings and that cost can get very substantial. I was talking to someone not long ago who had a home they'd owned for 30 years. It was now worth a couple $1 million, but they were going to have to sell it because they couldn't afford paying the property taxes. Even though the property taxes were limited in terms of how much they could raise because they homesteaded it so long, it still got to the point where the expense was so burdensome, they were looking to sell it. So there's a big push right now in the state of Florida to abolish property taxes for some homeowners. And when I say some, it's because I don't believe it's feasible when I look at the data and the math for how much revenue the state and all the local municipalities, because that's really where property taxes go. They go to the counties and then they're dispersed to cities and different organizations. But when I look at how much money we're talking about, I have a hard time seeing, no one's going to have to pay property tax anymore. Going from the extreme of a high property tax state to no property tax, I think would be very problematic for our budget in the state to be able to provide services. So I don't foresee that happening in terms of all properties. What I do think has a runway, again, assuming a sales tax increase, some use tax increases, some tourism tax increases, maybe some toll increases, seeing some things increase, using some surplus, and then an abolishment of property taxes for homeowners that own a home below a certain price, or an exemption up to a certain price. So the people that are above that price still get a benefit. And then, of course, probably not happening for commercial property owners, probably not as much happening for, people that own income properties, rental properties, investment properties, flips, things like that. My belief is that as I hear it over and over again, it's really meant and geared towards homeowners and owner occupants. Anyway, if that happens, we will see some improvement in our market for sure. The hope, I think, by a lot of real estate analysts and certainly brokers like myself, is that a year or two down the line, that finally passes. Maybe it passes in, next year and we see some interest rate cuts and then we see a huge spike in our real estate market again. Hard to say for sure, but I certainly think that it could happen and there is a lot of runway for that. Another thing that I think can help support that is population growth. So again, we have seen population growth pretty considerably in Florida. It does put a strain on resources and systems and infrastructure, but with new people moving in here, that is, new money. That's more property taxes, more sales taxes, more tourism, more improvement in GDP. And so last year, Florida started to see some fallback, some loss of population, especially in Tampa Bay. We saw that because of the storms. I've seen pundits and people on media recently saying, people are leaving Florida because of Florida's politics. People left Florida. There were certainly some people that left for politics, but there were a lot of people that left Florida because of the storms. They moved here during COVID. When I talked to people that were moving back to other areas, some of it is certainly affordability, which property tax relief or property tax increases could certainly help some of those people that struggle because their values could grow so they wouldn't have to sell their home and leave and go back, and they'd have less property taxes, meaning that their budgets wouldn't be as strained by owning a home. But the point I make, though, is that if we get back to seeing population growth, which we've seen it for a long time, it slowed a little bit specifically in Tampa Bay because you did have those people that moved here, never been through a hurricane, never dealt with it. We got hit back to back by a couple of rough ones. And there were people that said, I'm not doing this anymore. Even though hopefully we may go years again without any massive impact, just like we went many, many years before Helene and Milton showed up. The point, though, is that there is a group, Florida Tax Watch group, that says Florida's economic growth pattern should match or surpass national economic growth for the next 5 years because of population growth of 1.4 million people by 2030. This report by this nonprofit basically suspects and predicts that we are going to see our gross domestic product increase a few percentage points every year. The number of Floridians with jobs will increase from 10 million in 24 to 10.9 million by 2030. The state's unemployment rate is expected to increase from 3.4 to 3.6 though. However, if you look at the increase in employment, that unemployment rate is dwarfed by the population growth. Anyway, the expected growth of income, all of these things are leading towards really good things. What prediction, nonpartisan tax watch group, what prediction they can't factor in is what happens with storms. Because I can tell you unequivocally, Tampa Bay was on a record-breaking population growth trajectory, even with some real estate slowdown the last couple of years prior to Helene and Milton. Did we see some people leave? Of course, but net migration and population growth were very, very, very positive. So the wild card in all of this is what ends up happening with storms, what ends up happening with hurricanes. If we have between now and 2030, if we have, really light impact from hurricanes, I see this study proving accurate. If we see trends, we get hit with more storms, I think, or worse storms, and they hit larger swaths of the population. We'd gone a long time where a lot of our major storms were hitting areas that were just sparsely populated. The Panhandle, stuff north of us, stuff south of us. They weren't in, major economic growth areas. They weren't in big cities. They weren't in Orlando, Tampa, Miami. They were hitting lightly populated areas, so it wasn't slowing things down. Well, Helene and Milton kind of turned the tide a little bit, and now we've seen highly populated areas have massive impact. So again, it remains to be seen what will happen with our population growth. Florida Tax Watch Group predicts it will grow. That will obviously be good for the real estate market, whether it's good for our infrastructure, whether it's good for a lot of the people living here, going to cause more strains, more traffic. Nonetheless, if we do see an increase of 1.4 million people, that could help with the premise that, property taxes could be abolished for certain homeowners. And if that does happen and we see interest rate drops, I believe we're a couple of years away from another run up in real estate where we'll start seeing appreciation again. Speaking of appreciation, it is something we have not seen in a while in Tampa Bay. We've been in a market for the last couple of years. And when I say appreciation, I mean like significant. Like if the average sell price goes from $470 this year to $471 next year, it's not really appreciation. Okay. That's not even keeping up with inflation. I'm talking appreciation that is substantially more than inflation and impactful for people. So if you went from 470 to 520 in a year, that's appreciation. If you go from 470 to 474, 480, that's really not appreciation. And the last few years, we've pretty much been in a market where we have seen very little, if any, appreciation across most of our neighborhoods. So values have either been stagnant, stable, kind of staying the same, or in a lot of neighborhoods, they've dropped. There are a lot of homeowners out there right now that haven't gotten the memo. And there are a lot of homeowners that have homes on the market that are pricing them what homes are selling at a year or two ago, and they're 5 to 10% off because values in that neighborhood have dropped. If you're a homeowner and your home hasn't sold, it's the price. Today's day and age, with as much available information as there is to consumers, the information that's out there, the photos, the videography, if your home has not sold, you need to lower your price or take it off the market because it's not going to sell. You're going to chase the market. And that's what a lot of people do in a market like this. I grew my business during the Great Recession. My company helped hundreds of customers do short sales, avoid foreclosure in a market where we were seeing much worse numbers than we are today. We were seeing depreciation, substantial depreciation month over month. Not stagnant, not like a little bit of depreciation year over year, but month over month. I mean, 1 month to the next, the average sale prices were just dropping across neighborhoods. Even though it's not as substantial as that, in a lot of neighborhoods, it's comparable where you're seeing values drop. And when you price your home overpriced and you're in an area where it's depreciating, by the time there are going to be more homeowners in your neighborhood more motivated than you. Either they're ready to get back up north, or they got a bigger insurance settlement than you did, or they love a home and they're going to get a great deal on it, so they're willing to take a little bit more of a haircut than you. As those people that are more motivated sell their home, it pulls the values down in the neighborhood. You're not going to be able to get someone to overpay. The appraisal won't support it. And, I hear all the time owners say, whoa, go find us a cash buyer. You think people that are buying homes with cash are stupid? You think they're dumb? You think they got cash at that point in their life because they're stupid with money? No, they're smart with money. They're going to look at the comps. They're going to do an appraisal. They're going to see that your home's overpriced. So if you want to get your home sold today, you've got to beat the more motivated homeowners in your neighborhood. You've got to cut to the chase. You can't chase the market. Way too many sellers today, based on all the data that's out there, are doing just that. They're pricing their home. Let's say it's worth $475 and they price it at $500. Then they lower it to 485. Well, now the new number's 470. Then they lower it to 480. Well, now the new number's 465. Then they get to 475. And all the while, they make these small incremental drops in prices, never getting in front of and down to a number that the market looks at and says, okay, I'm a buyer at that price. That's what too many sellers are doing today. And there's a lot of real estate agents letting them. So if you're a homeowner, your home hasn't sold, lower the price.